Introduction to fundamentals. So we're going to take you through the basics of fundamentals, that's news, economic events, and just give you a brief introduction as to what those are, how those can move markets, and how to actually read the calendar and find your news. So in this first part, we're going to look at the economic calendar, how to read it, how to set it up, and then also how to find the broader macroeconomic events on news websites. So I'll give you a little bit of sort of like hints and tips here on what to do and where to find this news. So when you come to an economic calendar, what could be called an FX calendar, you will be presented with a lot of news. So if we scroll down here, so this is starting on Sunday, so this is this week's news. There is a lot of information being presented to you. So if you're a new trader, it's going to be somewhat overwhelming, especially if you have no real knowledge of fundamentals. The good thing is the majority of this stuff you don't need to know about. So every minute of the day, there's going to be some sort of scheduled data point somewhere coming out around the world. But we only really want to know about the high impact or the potentially high impact news that might impact the major pairs and therefore our trades. So the first thing you're going to want to do, and of course there are innumerable numbers of these economic calendars from different companies. So I'm just using them all from investing.com, and when I go through the settings, it'll be broadly the same on whichever one you're going to be using. So let's go to the filters, and we're going to start getting rid of a lot of these data points immediately. So you can see how many of them there are. Just by enabling high impact only, so in this case 3 stars, and clicking apply, we're going to filter out probably over 2/3 of this news. So now we have a lot less. We can actually fit it all just on one screen. So we've now got Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, all in one page. So you can see that's already less intimidating. The second thing you're going to want to do is again click on filters and get rid of the countries that aren't really important to your trading. So I'm going to get rid of the ones that aren't important to mine. Some of you may be trading other currencies, but I'm going to get rid of Brazil, Belgium, Finland. So the Germany, right? Germany is a different one because I get rid of things like France and Greece, Italy, Ireland. So other European Union countries that are still somewhat important, but Germany is the largest economy in the Eurozone, which is countries using the euro in the European Union. So it's a big country, it's got the biggest economy. Therefore, the data points for Germany are going to be more important to the market, to the euro currency, than something from, let's say, Belgium. So you don't need to have, if there is a potentially impactful news event from Belgium, it's not really going to be that important to the market at all. So you just want the Eurozone in general, which will count all those other smaller countries, and also Germany. So we're also going to get rid of Hong Kong. I don't trade their currency. India, Norway, Portugal, South Africa, Spain, Sweden. So get rid of most of these. So the ones that I'm going to keep on are Canada, because CAD is a major currency. Australia, you've got Aussie dollar. China, I don't trade the Chinese currency, and most of you probably won't. But the thing is, especially in the current climate, as we're recording this video, China is quite a big sort of importance on the economic stage because of the recovery from COVID, the reopening, the supply chains that then affects things like Australian dollar and Kiwi dollar. So I'm going to keep on China. Just really want to know sometimes if there's a really important, potentially high impact news event overnight, sort of how the Chinese economy is developing. So just I'm not going to go any further into that, but I'm just going to leave China on there. Germany, Eurozone, that's pretty much the European Union done, and the Euro. Japan for the Japanese yen, New Zealand dollar, Switzerland for the Swiss franc, US and UK. So we've already got rid of a lot of these. Let's click apply. It's probably not going to change the calendar because those weren't on here anyway, but sometimes they will be. So we now have a fully set up calendar. So let me show you now how to read this, right? What do all the columns mean? How can you interpret the right hand side here? Now, first off, you've got your timeframes much in the same way as you do on the chart. You have your news timeframes up here. So this week showing the entire week. Next week you can prepare for next week on the Sunday, let's say, but you can also narrow it down to just today or just tomorrow. So I would recommend, of course, on a Sunday or whenever you're preparing for the week ahead, make sure you check what's happening. Maybe even you could print this out at the beginning of every week, stick it on your desk so you don't forget that there's like a Canadian interest rate decision happening next Wednesday, which could be quite important to the markets. So if we just look at today, we only have 2 events coming up. We've had 1 event overnight. And I'll show you what all these things mean. So let's go to this week and let's find a random point. Let's say initial jobless claims. So a US data point affecting the largest currency, the US dollar. 3 stars. So it's high volatility expected, but this is just a default sort of setting on these calendars. So even though it's 3 stars and it may say high impact or high on a different calendar, it doesn't mean it has to be high impact. It might have no impact whatsoever. It's just that this data point over time can sometimes be one, depending on the context of the market and whether that's important for the time. It could be a high impact news event. So, it's not gospel. It's not like 3 stars, so the market has to move. I'll explain that a bit more in a second, but it's just one to potentially watch out for. So the time it's coming out, 13:30, this will always be, unless you do change it, in UK time. So it's coming out 1:30 this afternoon. It's a US data point, therefore affecting the US dollar. Now, some of these pairs, and some of these events, I should say, can sometimes cause impact on other currencies. But it really depends on the time, the macroeconomic picture of what's happening at the time, whether that data point could impact another country for some reason. That's not always going to be the fact. So it's more complex, but just be aware that most of the impact will be on dollar, and some of it sometimes on certain points might spill over to other currencies, but really just impacting mainly the dollar. So what's the data point? Initial jobless claims. So you might look at that and think, well, I have no idea what that is. You can click on it and it'll bring up this page here where it gives you information as to what that means. Roughly, it's not going to be an in-depth view. Of course, you can read out more about it if you want to, where it's coming from, etc., and also the previous data points, how that's been moving over time. So it's a bit more of an in-depth look at what that point is. So let's go back to the calendar. You've got the initial jobless claims here, and you've got these 2 columns now, forecast and previous. There is an actual too, we'll get to that in a second. So previous, that's an easy one to understand. The last week's data point, so this is one that happens to come out every single week. So last week, this came out at 293,000, so plus 293,000. Now, the forecast data point is what economists expect to happen this time around. So there'll be there'll be a survey of all the top economists, and the average will be taken, usually by like Bloomberg, a bigger company like that, and then that's the forecast figure. So they'll take the average of that. So the market in general is expecting about 300,000. Now, the actual, of course, only comes out when this actually occurs. So therefore, on this data point, if the actual comes out way lower than that, because this is jobless claims, it's not a good thing, not having a job, a negative would actually be a good thing, because if this comes out at 100,000, then that's only 100,000 extra claiming that they no longer have a job, as opposed to what was expected at 300,000. So some of these data points, more is good and sometimes less is good. It depends on what it is. You can obviously read into it more to find out. But previously it was 293, expecting 300. So if the actual comes out at 300, the market probably won't do anything. And this is what's known as pricing in or priced in. So it's a potentially high impact news event, but because the market's already expecting 300,000, and let's say this comes out at 300,000 or roughly similar, there's not really a shock to the market. It's no unexpected figure has come out. So if you're positioned in dollar, expecting that figure, and that figure comes out, you don't need to adjust your positioning to reflect that. So you're not buying or selling anything extra. You're just keeping the same position as before because you already prepared for it. So the market has priced in 300,000. If this comes out at 100,000, in this case, that's a good thing because the number is lower, the lower number of people filing for joblessness. That means that there could be a positive effect on the dollar. So if that comes out a lot lower, it's a shock to the market. So then the dollar might get bid up, might get bought because people were actually positioning for a worse result. So because it's better, they might think, I can buy some more dollars now because the actual result was a bit better. And that's why you often get really quick spikes on news because that's the pricing in. And most of the time, to be honest, those spikes don't continue. So these sort of economic data points can often just be very volatile for the market, not really kicking off trends necessarily, unless it's some big shock with like a central bank event, which is one thing we'll look at a bit later. So 300,000, that's forecast, previous, actual. And of course, some of these like existing home sales, if that's higher than expected, that could be a positive thing because then more people are buying homes. That then reflects on prices, which could increase inflation, which could impact what the central bank might do. So everything is tied. It's like a ginormous, complicated web of things. That obviously this is just an introduction to fundamentals. It's a brief starter introduction. It's nothing. I'm not going to go too seriously into it, but of course, this one data point of existing home sales is important for a very broad range of reasons, especially considering the time at the moment. So that's how to set up your economic calendar, how to read it, how to interpret it. Now, if you want to know more about sort of the impacts, let's say you come back to what happened yesterday. So yesterday you had only Chinese data. So really so far this week, there's not been much data. So you've only really had Chinese stuff on Monday. And then today there's just building permits for data. So not much has gone on. But you can also scroll down to the economic indicator news here. And if you go to show more and try and find one that could be relevant from previously, you've got something like, let's have a look. Well, something like China's economic growth slows down, but that's China. I want to go to a European one. So Eurozone trade surplus smaller than expected in August. So you can start to learn more about fundamentals also by going into the economic indicator news and then reading about what they say. It's only a short article, relating that back to the figure. Then obviously researching why that might be important to markets, if at all. I mean, this might not be important whatsoever for Euro. And then sort of looking at how the market reacted to certain points. So you can sort of learn also by doing that. So there's a decent introduction there to the economic calendar and economic indicators. So what about macroeconomic news then? So news that isn't just a data point that's expected. Like we're talking about when we think of macroeconomic, like the larger picture. So if a news event occurs and it's unexpected, it's let's say like an election result, or it's a natural disaster, or some sort of like, central bank speech, you can't quantify that in a data point. You can't say, the expected is 3%, because this doesn't really work for that sort of news. So with those sorts of news, there's Reuters and Bloomberg. They're both very good. So Reuters is completely free. Bloomberg you do have to pay for after a certain number of articles. However, if you go to Reuters.com, this is news in general. So it's just like it's like BBC. They're covering pretty much anything. But if you go to Bloomberg Markets, you'll get just the news that's important to business and markets. So a lot of this, again, won't necessarily be important to you as a trader because it's covering the entire world and every type of market, but there will be ones that are important. So let's say that you get something like this, right? So risk of higher Eurozone inflation on the rise, ECB's vassal, or however you pronounce that name. So this is probably a speech. So this guy he works for the European Central Bank. That has the major impacts on the price of the euro. He is talking about the risks of higher Eurozone inflation. So therefore, he may be talking about how the central bank might want to act in the future, which could then impact how traders position themselves for that potential action by buying or selling euro. And of course, it's very complex getting into that sort of stuff. But this is how these news events can help once you understand more about it, that these kind of will not show up on the economic calendar like this. So it's different type of news. Now, Bloomberg is better. So it gives you more sort of like in-depth analysis, better graphics. There might be like news coming quicker because you do technically have to pay for it. You get, I think, 10 free articles a month. So you can be very selective in which ones you choose. Maybe like only opening the articles that are to do with like big events like central bank interest rates, etc. You can also get a free trial. So I think you can get like $1 a month for a few months, and then you have to pay quite a bit more. If you're a professional trader, you're doing it every day. It's like your main, you're a full-time trader effectively. It probably is worth it to pay for this. So, if you do wish to in the future, that's good. But if you're watching this, it's more than likely you're either brand new or you've just got a small amount of experience. So you're fine with Reuters and then using up your 10 articles a month on Bloomberg for really important stuff. I'll give you an example of an article. I clicked on this one here earlier, and you can see that when I bring this up, it says I've reached my free article limit, so I actually got lucky for the video. So you can see that they give really good breakdowns of news events. This is to do with Turkish lira. Don't trade it, but if you do, this would obviously be important. So really nice in-depth breakdowns here, all their sort of Bloomberg charts. And yeah, if you want to pay for this, it's definitely worth it. But if you're new, you don't really need to. So that is an introduction to the economic calendar, how to set it up, how to read it, and also your macroeconomic news, where to find it. So you can use a variety of those. There's obviously going to be way more websites you can also use, like I know Yahoo News or even BBC can sometimes be useful for certain things. But I find that just try and stick to a few. You don't need to overdo it. And these are pretty good for trading and economic data in general. So that's the end of this part, and I will catch you next time.